Pronounced trend that we've seen in the voluntary carbon markets is the preference for carbon offsets generated by nature-based carbon projects like forestry or farming-related ventures. But some of the highest premiums have been given to blue carbon offsets. So in this video, we're going to delve into the public investment options that we have as retail investors to gain exposure to this new asset class. But first, carbon offsets are created by carbon projects that reduce or remove carbon emissions from the atmosphere. And these carbon projects operate in the voluntary carbon markets. If you'd like to hear more in-depth explanation of carbon offsets, then I'll link to a previous video I made on just that in the description. We'll leave it there for now. So the term blue carbon specifically refers to carbon offsets from nature-based projects located in aquatic or coastal environments, rather than the traditional nature-based projects that are located on land. The three main types of blue carbon ecosystems are mangroves, salt marshes, and seagrass. All these environments can be found in coastal regions around the world. And many of these regions are under threat right now because of shrimp farming or other damaging ecological trends. And that has been causing the release of large levels of carbon dioxide. Degrading coastal ecosystems are releasing as much as around 1 billion tons of CO2 annually, which is equivalent to 19% of the emissions we see from tropical deforestation globally. So Verra is playing a role in changing this trend. These areas can be developed as carbon projects registered under Verra, the largest carbon registry in the voluntary carbon markets. And there are two separate methodologies to do this. There's the REDD+ framework to avoid potential deforestation in forested and tidal wetlands. And then there's also the methodology for tidal wetland and seagrass restoration. So replanting or restoring these areas is covered as well. So you can generate offsets either way. As you can see on this chart, we have the prices of traditional REDD+ carbon offsets in red, and we have the blue carbon offsets in blue. And this chart is relatively out of date at this point, but it illustrates the idea that blue carbon trades at a significant premium. Some bids even went as high as $35 per ton in November 2022, compared to REDD+ trading around $15 per ton. This begs the question, why has blue carbon been in such high demand? For starters, nature-based offsets tend to trade at a premium in general to begin with, because these forestry or farming projects many times actually sequester carbon out of the atmosphere via photosynthesis or other means. So the market will pay a premium for actually removing carbon dioxide from the air, not just avoiding its emission. Secondly, they sequester more carbon than regular trees. The massive improvement in carbon sinkage doesn't come from the flora itself, because tropical forests actually store more carbon in living biomass. The upside comes from all the carbon stored in the soil or the ocean, thanks to these coastal environments. And the last reason for the blue carbon premium is that blue carbon projects are actually pretty rare. At the end of 2022, less than 5 million blue carbon offsets had been issued globally on an annual basis, with 13 million tons in the visible pipeline of carbon projects. By comparison, REDD+ projects had issued over 400 million carbon offsets by then. And even more surprising, nearly 90% of that 5 million blue carbon offsets was issued by only 4 mangrove projects. This is partially due to prohibitive costs and red tape around securing rights to coastal areas like this, and the fact that these ecosystems only add up to around 49 million hectares combined, in comparison to the nearly 4 billion hectares of forest on land. That's nothing. And progress on developing these projects had been slow to begin with, because Verra only revised their REDD+ methodology to include tidal wetlands in September 2020. So the methodology is quite new in comparison to many others. So moving on to how we can invest in blue carbon ourselves. There are no ETFs specific to blue carbon, but there are carbon developers and royalty companies that we can buy into that have blue carbon projects. The first and most obvious option is ClimateX. ClimateX is one of the only public carbon project developers, and they don't only just have one blue carbon project, but several. They're working on projects restoring or conserving mangroves in Sierra Leone, Mexico, and Suriname, with most of their projects currently in or around the project design documentation stage, with the first offset generation coming in the next couple quarters as of the recording of this video. Now, I don't have a position in ClimateX currently, but it is certainly a company that I'm looking into at this point. The other potential investment option that certainly isn't as concentrated on blue carbon is a carbon royalty and streaming company called Carbon Streaming. The company provided $6 million in funding to the Mar Vivo Blue Carbon Conservation Project in Mexico. In exchange, Carbon Streaming has the right to purchase up to 20% of the annual carbon offset production from the project. But as I mentioned, this company is significantly more diversified than Climate X, because Carbon Streaming has 22 different carbon streams and royalties from a variety of project types. Additionally, I'm personally not a fan of the company, and especially not its management team. I've made several videos explaining why I don't like them, and I'll link to those videos in the description below. But yes, that is also an option if you're interested. With that said, these are the only two public investment options that can get you any exposure to blue carbon right now, so we'll leave things off here. But I will continue to update you on this channel about any new investment possibilities that emerge in the carbon markets. So feel free to subscribe if that's content that interests you. Thanks for watching.